Yo, what's up? Another crypto update. Today is February 16th, 2021. Man, time is flying already. It's already February, and the new year, you can't call the new year anymore, right? Well, I think after January, you can't call it the new year, even though it's still relatively new. Only less than 1/6 of the year is done. It's, yeah, relatively new. Um, Today marked a milestone in Bitcoin, and as you can see, and if obviously you've been paying attention to the news, Bitcoin hit 50,000. It's pretty crazy, right? Um, yeah, I mean, what was it a year ago? Like, I mean, 7 days ago it was, and by the way, it's market cap. Look at the market cap. We're at about a trillion now almost with Bitcoin. That's insane. And in just one day, $75 billion worth of Bitcoin was traded, and most of the Bitcoin is essentially already mined, right? So 21 million total. The rest is going to take forever to mine. Who knows if it's ever going to get mined, right? Because of the exponential limit, kind of like the speed of light, that as you mine more, becomes harder and harder to execute the proof of work algorithm. But let's take a look at the price at the market. I like and everyone's looking at this, but I just like looking at it in my way, right? So I mean, this is since all of time, right? But all of time, like it's depressing to look at all of time when Bitcoin was the literally like how much money is 600. I mean, $126, and now it's $50,000 per Bitcoin, right? Like how much could you have amassed at that point? And again, you can't fault anyone for not knowing. But here's the deal, right? Like let's talk just this year. Year, right? Just this past year on a rolling basis, Bitcoin was at I mean, it was at $9,000, and I invested a long time ago in Bitcoin, and I look at that high, by the way, 50,341. I kind of knew that by today, it was going to be the day. It was just inching towards that direction, and all the news had indicated that would be the case. And I think once it hit 50,000, people started collecting their profits and then playing around with other coins, etc. But once it hit 50,000, I mean, forget about it. That's when that opens the floodgates, right? Or a new set of floodgates, because people now believe in the currency, and then there's all the um, investor FOMO and everything that goes into the psychological belief behind the asset, Bitcoin being an asset and digital currency, whatever. But yeah, it's crazy, right? Like, oh, by the way, this is not investing advice. I'm not um, I'm not suggesting that anyone invest in Bitcoin. Do your research. This is just for informational purposes, and I should have probably said that at the beginning, but you get the drill. This is all for informational purposes, and I might just start reminding myself to start saying this in the beginning, right? The CYA, yes, you got to cover your ass, right? Because you never know on the internet what people are going to do. Anyway, so let's take a look at. I want to try a different format here. I like listening, and I know a lot of people, get some kind of fascination with listening to strange people talk about, people, especially in the mainstream, talk about Bitcoin and their negative fears. Here's an interesting one. I didn't realize this, but let's react. Let's do a little reaction video to "You Just Crashed." Report this tab. Why? No, you can't help me. Let's see.
Lynn Nalden of Lynn Nalden Investment Strategy is back to give us her economic outlook and talk about cryptocurrencies. We'll start with Bitcoin again this time. Lynn, welcome back to the show.
Scheme? Hey, thanks for having me. Nice to see you in the new year.
Nice to see you too. Lynn, I know you've been very busy, and we'll talk about all these different things that have been keeping you busy. But first, I'd like to address a very interesting article you wrote recently, which is whether or not Bitcoin is a Ponzi scheme. First of all, I think I know where you're going with this, but why don't you give us a synopsis of what this article is about?
Yeah, so I kind of walked through the different definitions of a Ponzi scheme. And, for example, the SEC has a good list of what defines a Ponzi scheme and what some of the red flags to look for. And the reason I did that is because one of the common criticisms of Bitcoin is it's a Ponzi scheme that only, you have to keep, people have to keep on.
You know how many people have asked the question, is Bitcoin a Ponzi scheme? I mean, literally. Like, there's people still saying that Bitcoin is totally new. I have another video to show you after this, but, I mean, it's literally been around since 2010, 2009, and it's had serious investment interest since 2014, right? And again, since CoinMarketCap had reminding you around when the serious investment interest started, you can even call it somewhat here, right? Like its price started going into the millions, right? Its market cap. I mean, it was on, 2013, right? Let's just say that for argument's sake. Okay, so I mean, this question is constantly
which of
asked.
course has some degree of truth to it. So I went through it, kind of looked at it point by point. And you can kind of break that into a narrow definition of a Ponzi scheme, like an outright fraud, versus a broader definition of it. And so from the narrow scope, one of the things I looked at was kind of the whole launch process of Bitcoin. And so what we saw, for example, was that the creator, or creators, we don't really know if it was a person or a group, but Satoshi Nakamoto, it was interesting because they released a white paper pretty much showing how to do it before they launched it themselves. And so rather than kind of keep all their secrets themselves and then launch it, they released a white paper, they got criticism on it, they kind of had some interaction with other experts in the field, almost like a thesis defense in a way. And then they went ahead and launched the software, and then they gave themselves no pre-mine, so they didn't give themselves coins and then launch it. They had to continue to mine it just like anyone else.
Okay, well, see, that's good. So far I'm liking, these Ponzi schemes questions usually err towards the person calling it a Ponzi scheme, and so far this Lynn Alden is saying, in at least her broader definition of a Ponzi scheme, that she doesn't believe it's a Ponzi scheme because Satoshi Nakamoto had a white paper before he released the coin, right? And he didn't have any pre-mine for the coin. Like people who have I guess it's a hallmark in the crypto space that if there was a pre-mine for the coin in a number of cases, that it could be a Ponzi scheme. Who knows? I still have to research that trend and see if there is a trend there. But it's interesting to note, that like so far looking positive on my meter.
Networks, they had really no inherent advantage, and that kind of contrasts to a lot of ways that later tokens launch themselves. A lot of them use pre-mines, to their founders and their initial investors, whereas Bitcoin was launched more like a protocol rather than more like an investment. And so, by most metrics, the narrow definition doesn't really apply.
This is the narrow definition of the Ponzi scheme. Okay, so let's get to her broader definition. The narrow definition, I assume it means, according to her paper, it applies to the individual or small group of individuals, like Satoshi Nakamoto in this case, releasing something to get, a pump and dump, right? To get people really hyped and then dump after the price goes up. So by the hallmarks for the narrow definition of a Ponzi scheme are not present.
And the broader sense is just the idea that, really any non-cash flow producing asset is only worth what you think someone else is going to pay you for it in the future. And that's true for Bitcoin, that's true for gold, that's true for, fine art, beachfront property that you don't plan to rent out. All these kind of high-end kind of scarce goods, they're always based on, their scarcity and their desirability. And so it kind of goes through and just compares Bitcoin to some of those other things. And one thing that they all have in common is that they have some degree of utility, right? So, fine art has utility.
So this is where I think the divergence is going to occur. I'm predicting into the future. I'm into time series analysis, so I'm kind of... this is where I see a lot of people talk about the utility of Bitcoin as being limited.
A classic car has utility, beachfront property has utility, gold has utility, but they also have a monetary premium associated with them, and so they're bought for more than just their utility. And Bitcoin's kind of a similar way, because for its utility, you have permissionless international payments that pretty much can't be stopped, and easy mobility of funds, right? So you can just remember a 12-word seed phrase and go anywhere in the world, across borders, and basically transfer wealth wherever you want. That's its utility, and then it has that monetary premium due to its scarcity. And so the overall point of the article is that Bitcoin still has a variety of risks. It's going through an adoption period, and we'll see how far it gets. But it doesn't really meet the definition of a Ponzi scheme more so than any other kind of non-cash flow producing monetary asset.
I think the word Ponzi scheme may also be used loosely to describe something that is not inherently trading at fair value or is difficult to value in the first place. You mentioned assets that don't generate any free cash flow. Well, Bitcoin is one of them. You mentioned art, for example. Well, if I go to an auction and buy a famous painting for $1 million, well, who's to say that I overpaid or underpaid? How can you value something like that?
Well, that's actually one of the most challenging things.
So, like, the market... let me just see if I can get my thoughts straight on this one. I understand what he's saying, right? Okay. Fine art, it's the prices set by the buyer's fickleness, right? So essentially, is it the same in this case? Well, I mean, I think at this point, there's a lot of competing factors. Part of it is, yes, right? Like there's a lot of emotional investing going on into Bitcoin, especially your traditional FOMO people who come in whenever there's a Bitcoin pump. And I mean, if you even take a look at the kind of like, I mean, these extreme pumps, these are motivated in a large portion by FOMO. Okay, this was a massive FOMO pump. Okay, that occurred, right? FOMO and retail investors and institutional investors really barging in, right? Like at the 2017, this was considered humongous, right? At the time, this near like 29,000 or 19,000 price level, right? Now at a 50,000 price, like this was humongous, and this had like some retail investor interest, and now the institutional investor interest. Now the institutional investor interest is insane. Okay, so basically, what there is the emotional investing, but there's the practical investing, but there's also the practical investing that's taking advantage of the emotional investing. And so far, people, I think, in general, in my feeling at this point, if people have gotten farther and farther away in some respects from the utility of Bitcoin. Now, prefacing that MasterCard and all these companies are now getting into Bitcoin for the purposes of transacting. Like it's been going on for a while, and like I don't want to piss any FUD guys off about it, or anti-FUDders, but like, or whatever you call it. But the thing is that there is people who can argue solely for the price increase based on utility are not looking at all the other factors there. So,
a non-cash flow producing asset. And so the same is true for gold. And so, for example, with gold, what I do is, because it has a long history, I compare it to the broad money supply growth, based on the premise that, the amount of gold per person doesn't really change much over time. It's mined actually almost at the exact rate of population growth, ironically.
That's interesting. So gold is mined at the exact rate of population growth. That to me seems like a, very tangential, semi-useless fact for this discussion, but also interesting.
1 ounce of gold in the world per person, which is estimated. And so as the amount of fiat currency multiplies, you'd expect gold to roughly keep pace with that. Of course, it would undershoot it and overshoot it, undershoot it as sentiment changes, but roughly it keeps up with that, and that's what we see in history. Similar thing, beachfront property, you have these periods where it goes up very rapidly, but then if it gets overvalued, it kind of...
Yeah, so what is the period at which Bitcoin goes up rapidly? So I've seen a lot of people talk about cryptos in general going up around December, because for various reasons. I haven't really fully understood the crypto December effect. In fact, if people want to talk about it, I'm going to research that. But I mean, I can speculate that has to do with people getting Christmas presents, they're on the retail level. And secondly, for the New Year's, people executing on their plan for the New Year's, because people generally like to do things in a year cycle, right? A new year starts, they will start anew, and some of them probably in the previous year had this grandiose plan to take advantage of investing in Bitcoin, and even on an institutional level, right? So there's that.
Goes out of favor, and so with those things,
But what else is the season of Bitcoin right now? Is there a crypto season, or is this a completely cyclic occurrence? There's no seasonal component.
Challenging to value them because they don't have cash flows. You have to kind of estimate their attractiveness compared to other non-cash flow producing assets, and you can do things like compare the size of those markets compared to the expansion of the fiat money supply. And with Bitcoin, it really comes down to estimating how large it'll be when it's kind of finished this adoption curve. Like, some people say it'll be half as big as gold's market capitalization.
Well, I mean,
some people say it'll be as big or bigger. And, either...
I think it's odd that, people are making estimates around that. Like, you can't... There's no point in predicting the future, really, unless you consider things like the presidential race and things like that. I mean, people are kind of acting greedily, right? And in computer science, you have the idea of the greedy algorithm, okay? The greedy algorithm means the algorithm that takes the locally most optimal choice, and then eventually becomes the you get to a solution, you get to the final state of the problem that way. But it's not necessarily the most efficient. But in some cases, it might be. Whatever the case is, I think generally speaking, there's greed driving this process of adoption into Bitcoin, and idealism to an extent about the transfer of the financial power to the market, from fiat, from the institutional investors and the current Wall Street tycoons and big governments and the Illuminati, whatever, to the people through Bitcoin. All that coming. I mean, this is being driven by institutional investing. So if anything, it's institutions transferring power to other institutions and just taking advantage of highly a profitable and speculative asset. But, you know, I mean,
way, it just comes down to estimating how big it will be, and then from there you'd expect it to roughly grow at the rate of broad money supply increase.
Well, that assumption factors in constant growth of price for gold, right? Assuming gold doesn't collapse in value. You know, half of something that's collapsed in value is still not going to go up very much. Going back to
okay,
gold.
let's go to another person. I want to see. I like, I think that there's this little bit of, anti-boomerism that goes into like looking at people and talking about those. Like, I like to find people who are negative on Bitcoin. I mean, okay. So this was a big deal, right? The MicroStrategy investment with Bitcoin, but let's look for something negative. A huge dump. Oh, Bitcoin dump is expected a year ago. Yeah, I bet. I wonder what they're talking about now. Bitcoin. That's this reason. My search term was off. Okay, so there was a video, a CNBC video. I think that's maybe this one. Yes. Okay.
Right. So as boxes, but really regulation that's really based on.
So people always talk about regulating Bitcoin, okay, and especially people who are not too familiar with the industry.
What I mentioned prior is that it's important that the regulation not be fear-based. And by fear-based meaning...
This is a positive one. The regulation, she's for regulation, but she wants the regulation not to be fear-based. And having watched this video already, I can kind of give you a little bit of a background too. It's just saying also that, we don't want to force Bitcoin into the regulatory atmosphere of regulation that was meant to address older crises, right? Because, whether you consider Bitcoin a crisis or not, it's a new environment. So you would stifle innovation by doing that.
That it's not just in response to something that's new. You're just pushing back on the new and trying to force it into old boxes. But really regulation that's really based on risk. Figuring out exactly what are we concerned about. Are there entities within the market that are significant, that could really lead to knock-on effects in the market? And as such, then, what is that risk? Who are those entities? And then what is
well, I mean, we really don't know, right? Like, the original address is everyone thinks Satoshi's address, right, is still... Let's look up Satoshi's address, actually. Satoshi's Bitcoin addresses. Or let's see the mysterious Bitcoin addresses. Is that... No. Okay, you know what? I will curtail this for now because I think we've done enough research and learning today. But yeah, today Bitcoin had a huge day, and I think I just wanted to talk about it. And tomorrow we'll see what happens, right? All right, see you later. Yo, what's up?